financial argument. Follow us on YouTube.
Joining us today is our good friend and GATA chairman, Bill Murphy. Bill, it's great to have you back on the show.
Good to be back, guys. Thanks for having me. Appreciate it.
Well, we didn't plan this. 24 hours ago, gold and silver were looking very strong after the big Fed disappointment and no rate hike. But Bill's fired up here today. In the afternoon here on Friday, gold and silver getting hammered once again, and Bill's got his microphone's burning right now. What's your take here on everything we've seen over the past week, culminating with this latest afternoon Friday smash, Bill?
Well, it's a lot to chew on there. They got gold close to breaking down to 1308 ahead of all this Fed stuff, and silver held above 1850, and they got the prices away from any danger territories. And of course, everybody knew the Fed would do nothing, and we got the rally afterwards. And of course, silver was really standing out. And that is an anathema to the bad guys. And J.P. Morgan, they had just threw a fit yesterday when silver actually managed to close at 2002 to put it with striking distance between that near that key 21, and they threw a tantrum and took it down 18 cents after the COMEX was closed and fewer traders were around. Just penny boom, 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 ridiculous. And they went at it again today. Made it, even though gold was acting okay, did the same freaking thing. And then after the close again, they did the same thing again. The second day in a row, silver closed 1973. Next, about a minute later, 1960. It's just ludicrous what's going on, and it's so obvious, it's so blatant, it's pitiful, and it's going to go on until they blow up, in my opinion. Now and I think they will blow up, and you're going to see silver go berserk, but getting there is aggravating, as I mentioned, to put it mildly.
Just chatting before the show, Bill. So your take right now is that gold and silver aren't going to go up substantially until it blows and the whole manipulation game ends?
Well, I mean, that would be a pretty dramatic statement. I think that this has gone on for so long and in so many different areas. I mean, the manipulation of all the markets and propping the stock markets up and keeping interest rates where they were, and different things that they've done in terms of the monetary measures and so on, and the economy is struggling along and all that stuff. People are aware of it. And they're running out of tricks, and they're petrified of gold and silver taking off, especially ahead of the election. Because the mainstream and the establishment wants Clinton to get in there. So it's a rough time right now, and I think it's leading to gold and silver blowing up. And as we've discussed in the past, silver's their kryptonite. They're petrified of it taking out 21, and that's the reason that they went into action yesterday afternoon and again today. And I mean, it's ridiculous. There's nothing else going on. And markets just don't trade like this. And I think it shows that they're getting deeper and deeper in trouble where they reach a tipping point in which they're unable to get enough physical supply to do what they're doing. But, we've talked like that before, and it keeps going on. And I think that silver especially is going to lead the way up, and it's going to explode out of nowhere. And I keep looking for it. Of course, they know where our camp's coming from and other people, and as soon as it gets close to looking good, that they do what they did the past, as you said earlier, 24 hours. I mean, we're at 20, and then now it's just made a 1950 low. I mean, for nothing.
Yeah, and I appreciate how you've divided almost like chapters in the way the powers that be have managed gold and silver, and we've seen different phases in the way they approach the markets, and now it's very clear that markets across the board are totally manipulated. You have central bankers buying stocks, ETFs, bonds, everything, even real estate. And in the period, say, 2011 and prior to 2011, the cartel did do what you described as a managed retreat. I was wondering if you could talk a bit about that and then how that would compare to where we are now and the way they deal with the fact
that's a good point. Gold went up 12 years in a row, Eric, and as we got it by camp, and our people call it a managed retreat. In other words, gold was going up so much every year, and then it finally spiked late in 2011 when they decided to go into a whole different campaign and take it down for 5 years. And it seems that they're one of their goals is to make sure that gold's never in the spotlight, never to go to investment, never to, as it's a barometer of U.S. financial market health, and going up is good, so to make sure it never is making a dramatic statement. especially after there's some event when it should be making a statement. That's when it never does. So it was a managed retreat, and that's the way it was. And then everything changed, and I think part of it was because of all the quantitative easing they were going to go into further. They had to defray from what they were going to do and take the heat off themselves for doing it and keeping interest rates at a certain levels. And so they made the decision to attack gold and silver, and they did it. I think now we're reaching a different stage, and I could be totally wrong on this, in which they've gone too far in what they've done. They're reaching their own tipping points and not being able to be effective anymore in terms of getting the economy going like they want and all this kind of stuff. And they're going to be very aggressive with gold and silver, but I think it's going to blow up on them. Something's going to occur out of nowhere, and this time, instead of the managed retreat, we're going to get explosions in gold and silver, and we'll have to see how that pans out. But I think it's a different sort of shtick right now.
Yeah. We were talking prior to the show, and we'll dial in everyone listening and spying on us now. I'm more of a view that we'll probably see something that's kind of a hybrid between these two scenarios, where we'll gain a heck of a lot of ground in some kind of explosion. The cartel gets their rear handed to them because of some, geopolitical event, or just the nature of our markets going completely haywire, where there's just too many people coming in seeking, and unfortunately in the case this year, largely paper exposure on the COMEX, etc. But nonetheless, that brought us to 21 and in a touch earlier this year from 13, and there's no doubt that the cartel didn't want that to happen. So, and they're not totally in control, and I still think that there's kind of a possibility that we'd see the ability to get into the 20s and move higher this year, and it's just going to be an ongoing fight. It's very frustrating.
Well, my bet is it's just going to happen out of nowhere, and they're going to have this kind of aggravation, and then everything's going to change. And
I think it's
$20 silver. I mean, it's pitiful. All these years I've gone by with $20 silver. I mean, if it was 50, okay, it would be be more balanced, but not at 20.
Hey, John, is physical demand picking up? Phone ringing in response to dipping now?
Yeah, I mean, as we talk here this afternoon, order flow has definitely picked up with this latest match, but really it's been strong all week. We ran a flash sale on Wednesday after the Fed for 10-ounce RCM bars. We moved a substantial amount of Royal Canadian Mint 10-ounce silver bars, so much so that one of the top 3 APs ran out of those 10-ounce silver bars. And again, all the secondary product that was available earlier this summer, and not even available, really backlogging the physical market, that's all gone. There's no secondary rounds of any size on the market. But I mean, as far as premiums and availability and everything else, it's pretty steady. Haven't seen too much change over the last week or two. Even 90% is really holding about steady on the wholesale premiums. Availability remains pretty decent for all of the main government coins, Silver Eagles, Maples, etc. I think the U.S. Mint actually sold less Silver Eagles this week than last week. Looks like just over 300,000 coins. It's really about a third of capacity. So physical demand overall for the entire market, it's decent, but it's not off the charts by any means.
Anything in premiums?
No real changes premium-wise in the past week, really across the wholesale or retail markets for silver or gold. So it's been pretty stable.
The big question that many of us ask, and not as informed on the details as you are, John, and just it's where is all the silver supply coming from? And the smartest guys I know, I've said this before, don't know where it is. And all I can say is silver's acted so strange at times this year, and what they're doing and having to do with like they did yesterday and today. At some point, we will just reach a tipping point, and it will be gone. And I'm pretty convinced of that, and that's why I think we're going to get this explosion out of nowhere when they can't stop it. But it's not here yet, and so far, it hasn't happened. The proof will be in the pudding when it does.
Yeah, and it's very clear that all year we have a lot of people who are now understanding that very message. There are professional traders that are coming in, and though they are chasing paper on the COMEX, they're positioning themselves, and you can even see it in the way that the market is trading. I mean, on Tuesday, in the Asian session, going into the evening with with the FOMC announcement coming on the next day. All throughout that whole London session, you had a nice accumulation pattern of like a 45-degree slope. Those were professional traders working that market, playing like a cat plays with a mouse when it comes to the cartel. And I think that there are sophisticated paper buyers here. That's the reason why we moved from 13 to 21, while the J.P. Morgan and friends were throwing the kitchen sink at the COMEX and elsewhere. And who knows? I mean, this standoff isn't over. I think that we're going to probably break it.
Excuse me. I think you're so right, Eric. And it's been one of my things to focus on this year is in that regard is the COMEX open interest. As you know, went close to 225,000 not too long ago before Morgan took the price down, and the all-time high used to be 193,000. So I think you're again dead right about there's some big players in there going after a big money play for silver to move again, not to 50 but to 100, and that's why even today now they got the open interest is over 200,000 again. It's coming back up from around 190, so it's still huge, and even. Compared to yesteryears, it's at all-time highs, and that says it suggests that there's some very smart big players in there for this big play, and they know they have to be patient. And so, even though I'm grumbling here, it's still say $19.50 or $20, and while that's a pitiful price, it's not far from breaking out. We could be at 21 in a blink.
Yeah. And just for our listeners, if anyone is curious, I was posting charts on a half-hour basis kind of rhythm when this was all unfolding back on Tuesday evening / Monday or Friday, Tuesday through Wednesday, and you can see that on my Facebook account if you want. But it's very clear that the professional traders are accumulating this market and going up against the J.P. Morgans of the world and giving them heartburn. And it's only that today we're seeing the J.P. Morgans of the world win.
And the one thing that I've been expecting and I've been talking about for several weeks here that I didn't think there was a chance they're going to raise rates this week here in September, but unfortunately this sets us up for 3 more months of the Fed spewing propaganda that they're raising rates in December. And actually I think there's quite a good chance that they do that in December, but unfortunately we're going to have to listen to it and them try to jawbone the markets for another 3 months. I wish they would have just raised rates and been done with it.
Yeah, well, the New York Fed released their economic assessment for the fourth quarter, and they're slashing their estimates for, and the third quarter too, actually. I think it was 0.5% reduction in their call for GDP for both third and fourth quarter. I know that was 0.5 up for the fourth quarter just off the top of my head. So, they're beginning to dial back expectations and play the game of trying to be able to jawbone in both directions as they fiddle with the market like an orchestra conductor in the way they shape psychology. So much of public policy in our monetary system now is nothing but shifting psychology. It's crazy.
Well, what will change at least is we'll have the election behind us soon, and we don't have to deal with them doing things because of the election and doing what they can to get Clinton elected. And at least we won't have to deal with that, and it'll be a little, it's still the Fed speak and all that garbage, but won't have to deal with this extra influence that's been incredibly aggravating too.
Speaking of the election here, we got the first major debate coming up Monday night, and I was just reading today that there's not going to be any hacking breaks or coughing breaks or fainting breaks allowed. It's going to be 90 minutes of full-fledged action and no muting of mics or anything. So you think Hillary can go for 90 minutes?
I've been saying for about 2 weeks that her health is such that she will probably faint. So that's my bet, my secret hope.
I don't hope she faints this early. This early is plenty of time to replace her. If she fainted live during a debate, she'd be done.
There's not enough time to replace her with somebody that would actually be able to win against a hurricane like Trump, in my opinion. And we talked about that in the last show. It would have to be someone like a Warren Buffett or somebody who's like super famous, has built-in cachet with the American public. And I don't think that's going to happen, but who knows? She'll probably limp through this whole thing and then just lose. That's probably what's going to happen in the next 2 months.
I'll let you guys deal with that one. You got me.
Yeah. stepping into a minefield. So where do you think the rest of the year has in store?
Well, Eric, I really believe it's really not too helpful, I suppose, but something's going to come out of nowhere here. There's always talk about black swan kind of thing. It's going to jolt the markets, like you mentioned, and things are going to take off. I mean, the downside for the rest of the year in terms of the Fed stuff's behind us, and there are so many things that haven't happened yet that people are talking about regarding various financial institutions, and all these things are going to happen. And quite frankly, in the last number of months, it's been very quiet, and there hasn't been any turmoil or anything to put extra bids into the precious metals. And I think they're pretty much sold out when gold at 1308 and silver above 1850. And I think that the probability of moving higher, and especially out of nowhere, is really there. It's just days like today that get me steamed up because I've seen it too often. I'm tired of watching the same drills over and over again, and not too many people dealing with what is actually going on and who's doing what. And it's life's going by here. It's time to get moving.
Speaking of black swans out of nowhere affecting the economy, Bill, I just read this morning that the law is set to go into effect tonight, barring a last-minute veto by Obama, that we're going to blame the Saudis for 9/11. And the Saudis are threatening to dump the dollar and dump T-bonds if we pass that law. So nobody's talking about that, but that's something that definitely could be a black swan if they followed through with that and dumped U.S. paper.
Well, and some people are talking about this thing next Friday about the special drawing rights issue in China and how it might affect the gold price and so on. And there's been a lot of speculation about some things happening at the end of September, and any one, if it gets out of hand, could really be the deal that gets things cooking.
Yeah, unfortunately, I think there's also a lot of hype and an interpretation of how that whole SDR basket inclusion and the evolution of the reduction of the dollar in terms of reserve holdings for sovereign wealth funds and central bank holdings and whatnot, dollar reserves and stored in bonds, the kind of pundit analysis that's in our community right now is a little over the top. I don't think we're going to see any monumental shift in the percentage of the U.S. dollar reserve assets on a worldwide stage in any time soon, other than maybe 3 or 4% or something over 6 months, and that would actually be aggressive. So, but it is a longer term positive. Absolutely,
you're so right. I mean, not one thing that's been talked about in advance or anybody in any of our camp, and God bless them, go there, has worked out to mean anything. Nothing. Not one event. And it's always been that way, and it's maybe one day that will change. I from my standpoint, the one thing that really was a market event that moved things and really was so much fun, it was different, was Brexit. It's because everybody, the powers all got it wrong. And they got stunned, and you could get $100 move in gold. But almost every other thing that we talk about in advance, if it's known, it doesn't never mean a thing. At least to my way of looking at it. And one day it will, but so far it hasn't been the case.
Yeah, and unfortunately there's a segment within our alternative asset community that is basically making the argument that we will see a dollar collapse even. Many people are making that argument, within the next 2 months. That's not going to happen. It's actually counterproductive to have those kind of messages out because it builds expectations, and then everybody gets depressed when they're looking around afterwards if they're newbies to this market and they assess all of the failed forecasts and on and on. We know how that dynamic takes hold. And I'm a little frustrated, frankly, and when I look at the kind of comments that are being put out by a lot of analysts or so-called analysts on this subject. And I'm not
couldn't agree more.
They're even some of the most respected people have gotten a little bit too much in the direction of marketing lately when it comes to their newsletters that they're pushing and all that. But anyway.
Last minute thoughts here on gold and silver, Bill, as we head into the last quarter of 2016. What's your outlook in the short to medium term? More of the same, more smashes through the election and through the fourth quarter?
Well, again, as I mentioned, I think we're sold out. The surprises should be on the upside. And as I said, they're protesting too much, as an old expression, and that things are liable to all of a sudden surface out of nowhere, and we're going to get some serious upside action here. And I think we have a lot to look forward to. And I think it's going to be pretty good. It's just when you get a day like today and you watch them do what they do, and Eric's has seen it 50 to 100 times, I mean, you get tired of it. It's just human nature. But, boy, I think we got a lot of fun ahead, and it's going to be a great end of the year.
Yeah, I think, Doc, what we were talking about on our last show, 30, 40 days forward, 45 days, easily testing that 22 again. I think that's where we're going to be. The market is sold out, and there's not a lot of slack in this market. And we have these professional traders playing like a cat with a mouse, and J.P. Morgan is just kind of, jogging in place. They've thrown the kitchen sink at the market for the better part of this entire year, and there's not getting much traction, and it's very painful and frustrating to see this kind of garbage that happens as we're going through the post-COMEX close now as we record. But, 50,000-foot view looking at the market overall, and with the nature of where our equities markets are and the bond market and the craziness that's going on geopolitically, the powers that be are now openly talking about how confused they are. And that is another major difference in the last some odd years, particularly this year as well. I mean, everywhere you look, when you look at where they are speaking candidly, whether it's policy papers or particular snippets that you can get out of interviews or whatever, or maybe a gentleman, Mr. Wright, who is the former chief economist for the Bank of International Settlements, talking about debt jubilees, and the number of examples we can point to where central bankers are saying some pretty astounding statements about how basically they recognize how screwed up the system is something that is, in fact, different from where we were even only 2 years ago. So I think the thesis of us being in the end game is a valid thesis, and it's just a question of how all this stuff unfolds. But I think we're going to go higher in the fourth quarter, and I think we will be testing that 22 sometime within the next 45 days. We'll see.
If I might, in my finish, and I could be completely wrong in this, but I think if we take out 21, we go bonkers.
Yeah. Well, but they're gonna put the brick wall in front of us. 20 was almost. It was a pain to get into 80. Sorry, go ahead.
No, it's okay. I just think if we can get above 21, we've seen what they've done. It means that that's a partial loss of control. And you're going to see it would be, the action will be frenetic, and you could see 25 in a blink.
Yeah, no, I agree. But you will also agree they'll throw the kitchen sink at it. They'll try to make 22 a brick wall.
Well, my hope,
maybe they will be overrun.
They're going to hit a tipping point in which they don't have the physical supply to be able to do it, and that's why it won't work.
Yeah, I can definitely see 22 being the last line of defense. If 22 is breached, there's not really a lot of resistance between 22 and 26, and I agree. It could close that gap very quickly.
Yeah.
One final question for you, Bill. At what point do you see the general public being involved in this bull market? Or is it something that they don't have the chance? It just all blows up and it's too late one day. What's your take on that?
Well, I don't think it'll ever be too late. It's a really good question, but it's going to be at much higher prices, and a lot of it will be what other markets are doing. As long as the Dow's floating along and everybody's happy, and the people that have their money in it, and there's no real panic, and they don't see reasons to go to alternative investments, and they're not as concerned. It's part of what they've done right now. I mean, you've got the Nasdaq just made an all-time high, and the Dow's well above 18,000, up near all-time highs, and people are generally that are in the markets are happy. But when all of a sudden, when the ass hits the fan, and there's chaos, and the markets are in trouble, and when gold and silver take off, you probably gold above 2,000, and when silver gets up, 40 and 50, all of a sudden, where the public is in the West, they're going to come pouring in our markets, and incredible news for people that own it already, because there's very few Americans that own gold and silver. I mean, it's just minuscule. So you just take that up that percentage a bit, and oh my gosh, what it can do to the price because of increased demand. And it's coming, but it's going to come at much higher prices, I would think.
Before we let you go, I love asking you this question because you have your ear to the ground, and a lot of people do interact with GATA. Have you noticed anything different when it comes to money managers or professionals just trying to figure out what's going on in the market, people who have not been in the market but are exploring?
I think you touched on it earlier in silver. There's some bigger players, and I think there's some big money involved in the silver market that's been there all year, and they're looking for not just a move, and that's why they're not getting flushed out, and the open interest remains in all-time high territory because they're looking for this play to 100. And
as far as like money manager, but as far as
I
money
don't know
manager,
their names. I just know how the market.
Personally,
I just don't know. I mean, I know how the market's traded. I don't have any insight on anybody in particular that's making a move, but I think I can just see by what has been going on all year. And again, you touched on it, that in terms of the players that are in there, they're not shaking them out, and that's because they're strong hands. And at some point, I think they're going to tie up the physical market to a greater degree and go after that, and then off we go.
All right. Before we close, Bill, if you could let the listeners know where they can find your Midas letter.
Well, yeah, I've been doing it. As Eric knows, this is my 19th year now, themetropolecafe.com. People can sign up for a 2-week free trial, and my colleague Chris Powell at GATA does a great job with his GATA stuff and putting out some information, and they can go to www.gata.org and just get on his list, and he does a great job. I'm looking forward to seeing him in New Orleans in another month, and it's been a long time since we've had a chance to chat in person, so that should be a lot of fun.
And that's really nice timing for that conference, too, given all that is going on, the election, et cetera. I mean, maybe that might actually be a positive for the sector overall. We shall see.
I hope so.
All right, so we'll close the show there.